Hey everyone, welcome to April 2025. This is going to be your market update for the month of March, and I'm sure you're all anxious to see just what happened in March because it was a crazy month. And we all know there was a lot of noise coming out of the US. We've had just an unbelievable amount of talk on tariffs and Canada becoming the 51st state, of course, and just all kinds of rhetoric and confusion. And I will tell you this can definitely affect some people's psyche. For people who might be considering buying a home, it will definitely ask themselves the question: Is really now the right time? Or maybe if you're selling a home, is now the right time? And then on top of it, we have a federal election coming up as well. And I'm excited, depending on what side you're on, it doesn't matter. At least, no matter what happens, we're going to have a prime minister, an active prime minister in Canada coming into the month of May, because we need some leadership in this country. Now, with that being said, the stock market making corrections and all this going on, of course, is it affecting the real estate market? And the answer is yes, it is. But it is not affecting the real estate market maybe as bad as some people might think. I've had people that have said to me, oh boy, things are really slow. But I think what's happening is people are looking at Canadian real estate news. Please don't do that. What's going on in Ontario is not what's going on in Alberta. So real estate is very local. And I can even tell you there's a lot of differences between what's going on, even between Edmonton and Calgary. So if you're looking at real estate, you have to be looking at local. So hopefully when you watch this today, I'm going to take you through a lot of different charts and show you what's going on in different markets. I'm going to do things a little bit different today. I'm going to show you not only what's going on right in Calgary, I'm going to show you Rocky View County, I'm going to show you Foothills County, and the surrounding towns around Calgary as well, and just give you a good sense of what is going on in all these different markets. And I'm going to hope that's really going to be helpful to you, especially if you're trying to make some plans and trying to figure out if right now might be the time for you to buy or sell or not. Now, let me also show you. So I'm going to first of all kick things off today with showing you a copy of my book. And I wrote this book just a couple of years ago called Selling Secrets You Can't Afford to Miss. And I want to tell you something. I've put my 25 years of experience into this because I have been through quite a few different markets. I've been to complete sellers markets. I've also been through some buyers markets. So I've learned a few things along the way. This is only 100 pages, but I can promise you, if you'd like to read this book, because you're thinking of maybe selling your home, you will get a lot out of this. I go through in detail all of the little strategies that make it possible for you to sell your house for the most amount of money, do it in the least amount of time as possible. And I will send this to you either digitally if you want to just read it on your computer, or I even have it in paperback. All you have to do is send me an email, and I will do that for you. Pretty simple, but I think you'll really enjoy the book. Okay, this is the chart that I always kick it off with. You'll notice that we sold 2,159 properties in the month of March in Calgary and surrounding areas. That is 18%, well, 18.77% lower than last year, which was 2658. And I might be sounding like a broken record when I said this last month, but that is a very normal March. This is not an abnormal March, almost 2,200 sales. So we're just getting back to more normal levels. But there's been people that think that we're in this big correction because of all the tariff talk. But what we are noticing, though, is new listings. We have 4,019. So that's 26.66% more listings than we had a year ago. So last year, we did have higher sales and lower inventory. And that's why we saw price increases that were going up on average 1 to 1.5% per month. With this kind of inventory level, with this kind of sales, we're not going to see those big price increases. And believe me, that's a good thing. A healthy rate of increase for real estate should be between 1 and 3% per year. We shouldn't be seeing 7, 8, 9%. That's not sustainable. It's not even very healthy. So right now we have 5,154 listings on the market in total, and that is compared to 2,546. So you can see that in total we literally have 102% more listings. We had 26.6% new listings come on, but in total, we have twice as many listings as we had last year. And I want to tell you, I want to emphasize this. We're a city of almost 1.7 million people. So 5,154 listings is not terrible. That's only 2.39 months supply. Last year, we were at 0.96. That's just not enough inventory. So this is quite healthy. And that just means by healthy, if you're selling, you're not having to sell at a discount to sell your house. You don't have to keep reducing your price if you've priced your home where it should be. And if you're buying, you have a little choice. You know, you don't necessarily have to feel like you have to grab something quick because it's selling quickly. So this is more, normal markets right now. And look at our sale to list price. See, we're still at 99.08%. Last year we were over 100% because we had a lot of properties that were selling over the asking price. So you can see that that buyers are okay with paying close to the ask price if the asking price seems to be reasonable. And our benchmark price for the month, we ended up at $592,500, and you can see that that's just not much higher than it was a year ago. When you look at the benchmark price from last year at $592,000. So this is a pretty healthy market. The index, by the way, we started this index at 100 back in 2005, and that just simply means that from 2005 until today, prices in Calgary have gone up 177%, just to give you an idea of what that looks like. Now, year to date, you can see that 2025, we have done 5,328. So that's down 17.25% from a year ago. So again, I'm repeating myself, but this is a very normal market. It's a very healthy market. And, and I'm glad that in the midst of all the rhetoric that's coming out of the U.S. in the middle of an election, that we're still seeing a healthy real estate market in Calgary in the month of March. But I'm going to tell you something. This is just my personal belief. Once this election is over, I really believe there's quite a few people right now that are sitting on the sidelines and they're just waiting for that moment where they feel like it's confident. They feel like that this is really going to be, everything is going to be okay, and it's okay to pull the trigger. And that could put some pressure on pricing. If we get too many people coming into the market at the same time, it's very possible that demand could go up, and it could put pressure on prices that could be causing them to head north. And so for that reason, maybe buying right now would be very good to take advantage of that in the month of April. And some of you that are selling might say, well, maybe I should wait. Well, maybe you should. I'm not saying that you shouldn't, because I'm just making a bit of a prediction. I don't have the crystal ball. I can't say for certain that that's going to happen. So if you're a seller and just hoping that that'll happen, there's a bit of a risk to that as well. But I'm just saying, certainly for buying, we had a good March. April, I think, is going to be more of the same, but there could be some pent-up demand that could be coming, is all I'm suggesting. So I got these new charts now that I really like because it really gives us a snapshot of everything. So let's just go through it on all of the different products in Calgary. We're looking at just Calgary alone here. You can see the detached market. We are bordering a balanced to a seller's market because we're sitting at 47%. So 53% of the detached houses did not sell that were listed in the month of March. And I can tell you, if you did not sell, there's a couple of reasons. There's usually 3 reasons why properties don't sell. 1, your price is too high. 2, you were targeting maybe the wrong buyers and your marketing wasn't ultra targeted towards the right people. And 3, maybe your property wasn't quite ready to be sold. Maybe there were some things that you could have done to make it more attractive to buyers, right? So that's it. There's no other reasons why properties don't sell. Our benchmark price finished at $769,800 for a detached house. And so we're up 1.22% from February 2025. So you can see we're still at a very healthy market for detached. The demand is still there, and we're up 4.11% from a year ago in March of 2024. Moving over to the semi-detached, 45%, almost identical. Now we're at 691,900, but don't forget there's a lot of really like luxury infills that are in that price range, because you can still get a pretty nice semi-detached in the neighborhood of in the fives into the low 600s. I just actually sold a really nice one with a garage, finished basement up in Evanston, just in the low 600s just last month. So that kind of value is definitely still there. We're up 1.23% year over year, and we're up 1.23% month over month, and we're up 5.12% year over year. Heading over to row houses, the demand is still there, 48% absorption rate. So, and you're in that price range, 454. So obviously there's a lot of row houses that are in the 400s and into the low 500s. We're seeing a lot of the nice newer row houses with some good square footage. I know I'm putting one on the market down in Legacy coming up next week for $520,000. That comes with a 2-car garage. Those have become really popular because they're great properties for people who are buying their first property. Maybe you've gone through a divorce, you need to downsize, and there's a lot of that kind of product on the market in Calgary. And you can see the demand is there. We're up 1.61% from February, and we're up 2.11% from March. But this is because that price point is where a lot of buyers are. And if we go over here to apartment condos, well, that's dropped to 32%, and there's no question we're feeling it. We had at one point last year, 70% of the condos were selling, and now we're only 32% of the ones selling. Our benchmark price is at $336, and you can see we're up 0.5% from February. We're up 2.59% year over year. So that market is definitely just a little bit softer, and you just have to be willing to accept that if you're selling your condo, which means you really do have to be priced right, and you really do have to make sure you have some strong marketing. And if you have questions about that, don't hesitate to reach out to me. But you can also see 27, 28, 27, 36 days on the market. So for all the properties that are being marketed right, got prepared properly to be sold, priced them right, you should be under contract within a month. And that's pretty healthy for a balanced market. So moving on to Okotoks. Look at this detached market in Okotoks, 73% of absorption rate. Like, what's going on in Okotoks? We got a $715,000 price point. So it's really not too much, as far as pricing goes, it's not going to save you too much money going to Okotoks. Quite a few people want to live there. Look at month over month, 2.68%. It's up 4.74% a year over year. But when it comes to semi-detached, the absorption rate drops all the way to 8%. So people really want to be living in a detached house when it comes to Okotoks. These are some of the things you have to pay attention to if you're an investor. You don't want to be buying a product that's hard to sell. 576,200. But that being said, we don't have a ton of semi-detached in Okotoks either. Over here to the row houses, 432,000 the benchmark price and 44% absorption rate. And they have been putting some row houses into Okotoks now, but I do know for the longest time, it really was detached houses that brought people to that community. And apartment condos. So you can get in there, 285. So this is the big thing. If you want to save some money and you don't mind driving into the city, if you work in the city and you want to get into the market, you can get something in Okotoks for that $250,000 to $300,000 price range, which is really affordable to most people. And I'm not surprised it has a 42% absorption rate. And if you haven't been to Okotoks, it is a super nice community. It really is beautiful. You could a lot of mountain views in the area, just access to all kinds of amenities. I mean, they really built that town up quite nicely with all kinds of different things. Of course, if you've been following the real estate market in the last 5 years, you'll notice that Cochrane has taken off. The demand has really been there. And I really think COVID has something to do with it because a lot of people are still on a hybrid where they don't have to be at the office every single day now. So look at our absorption rate. We're at 38%. Now, that is a far cry from Okotoks. I don't know why there's such a contrast between Cochrane and Okotoks, but the demand was not there last month for whatever reason. And our benchmark price finished at $686,800, although prices still went up month over month, which I find that to be quite interesting. But I do know that in Cochrane, there was quite a few dated properties that I noticed were on the market last month, and some of those were sitting. And dated properties, it's very easy in a town like Cochrane to compare if you're a buyer to just go into a little different community not too far away and look at something that was built in the last 5 years. And I think people are mindful of that because they're looking at, well, if I buy a dated property, I do have to renovate it, and I could just go up the hill and get something newer. So I know that that's a factor for people that are selling in Cochrane. Semi-detached, though, 47%. So the demand is far greater there than Okotoks at 521,000. And they've got quite a few selection of these semi-detached in Cochrane that I've noticed, and they're nice. They do a great job of these now, and there's no stigma attached to living in a semi-detached like there used to be many, many years ago. But look at the row houses. So 439, and that's really where it's at. I mean, if you can get into the market right around the low 400,000s for a townhouse, you can see 61% absorption rate. So there's quite a high demand there. And even for the apartment condos, 57%. I mean, higher than Calgary, averaging 335,600. And same thing. If you haven't been to Cochrane, take a drive out there. They have a great downtown. They have a ton of amenities. You've got the Bow River running through it, the foothills of the mountains. So it's a real active lifestyle out there, and I really think that that's what's drawn people to it. And now with the Stony Trail being finished, it's so much easy just to get on the 1A and can access north and south pretty easy once you get into Calgary. So we're looking at Chestermere. I don't know what's going on in Chestermere, but listing absorption rate of 21%. This place was booming after COVID, and I don't even know why things have dropped off. But I mean, if you look at the benchmark price, $818,000. And even though prices went up, I mean, from 2.72%, even though there's only a 21% absorption rate. But wow, it was incredible how many people moved out to Chestermere and really loved that community. And it's the same thing. The amount of building going on out there has been phenomenal, and it continues to be that way. Not sure why we saw such a low absorption rate, but the demand is definitely still there. 42% absorption rate on semi-detached, so that's a real healthy market. 600,000 though is a benchmark price. Boy, those prices are really creeping up, but still, in relation to the detached at 818,000, that's pretty good value. Moving over to row houses, 35% absorption rate, but look at the pricing here. You're well below $400,000. So I mean, there's some good value out there. 350 to 375, you can get into a townhouse. And the thing about Chestermere, I mean, we all know that the lake is there, but boy, did they put in a lot of amenities. So they've really got a nice community there now too. And the shopping, of course, and right off of 17th Avenue, as you head over to Stony Trail there at East Glen. It's really nice in there. There's all kinds of stores that you can shop on there. And, again, Stony Trail is so easy to get around the city and over to the airport. Apartment style condos, 21%, $257,100. So that's really good value to get in there. And there's some nice ones. I actually sold one overlooking the lake a couple of years ago. What a nice place. And they've got some nice condos that are close to the lake and really makes the lifestyle fantastic. For the longest time, Airdrie was the place you went to just get a nice detached house for quite a bit less than Calgary. And now look at the benchmark price is $651,000. But what's happened out in Airdrie is, they put in the Crossiron Mills Mall and all the amenities all the way to Calgary, and there's so much out there, and we've had a tremendous amount of people that work at the airport or in the north end of Calgary, or they even work up north in Fort McMurray, and that has really caused a lot of people to want to be in Airdrie. So still a high demand for detached houses. I mean, 44% absorption late last month, and we saw almost 2% increase in month-over-month sale pricing. So the demand is definitely there. You move over here to semi-detached, 508,000. So that's attractive. I mean, for being a first-time buyer, investor, but again, even some of these semi-detached, there's some square footage on them. They have all of the same size and amenities inside the house and finishes as you would see in detached houses. and yet you can get in around that $500,000 range. That's a good balanced market at 37% absorption rate, and prices went up 1.7%. Row houses, $389 for a row house. So I know we do property management. We actually manage several townhouses in Airdrie, and they're quite easy to rent. And you know, it makes sense if you can buy something in the 300s in Airdrie. Those become good investments. 36% absorption rate, so that's also a really healthy market. And interestingly enough, look at the condos, and there's some pretty cool condos in Airdrie that are right near downtown, walking distance from all the amenities. $292,000. A lot of them are 2-bedroom, 2-bathroom, and that's a 38% absorption rate. So it's interesting to see that some of these numbers are better than Calgary. All right, for any of you that are interested in Rocky View, I don't always do this on these videos, but the demand has been incredible for Rocky View. I've been really impressed with how many people really want to be outside the city, having some space, acreages, land, you name it. And over the years, I've done a lot of it. I've been very fortunate that I've been able to help people buy condos, single family homes, luxury homes, farmland, acreage. Like, I've done it all, and really familiar with when it comes to Wheatland County, especially Foothills County and Rocky View. But look at this absorption rate, 31%, and a benchmark price of $815,300. Now, in Rocky View, you got a real mix. There's some luxury properties in Rocky View that are, you know, in the millions of dollar range. But I mean, it's a big county, so there's a lot. It takes up a lot of space. It's like a horseshoe right around the city. So that's a healthy number. But it just goes to show that you can still get a decent property, like a 2-acre with a house on it, in that $800,000 to $1 million price range. And that's, you know, there's not a ton of them. You have to be patient and look for them, but they're out there. And you can see the prices went up 2% from month over month. Semi-detached, yep, they're available in Rocky View, $572,000. Not as much of an increase there because, you know, there's not a lot of product when it comes to semi-detached, but they're out there. Same with the row houses, $439,000. And apartment condos, not a lot of them there, but $313,000. So numbers that are all fairly comparable to Calgary, but of course, you know, detached is really where most of the product is when it comes to Rocky View. All right, we'll wrap up with Foothills County. You can see their absorption rate last month was 47% at $746,000 for a detached property. I will tell you this, because I get these calls all the time where people want to look at subdividing land in Rocky View or in Foothills County. I will tell you, Foothills is easier to get along with than Rocky View when it comes to subdividing, but it is a slow process. It's a difficult process. So just beware of that if that's something that's on your radar. But feel free to reach out to me if you have questions around that, because I've got a lot of knowledge around it over the years. I've dealt with it, and I've dealt with the county. Semi-detached, $546,000. So no surprise. These are healthy numbers, you know, comparable to the city. 48% absorption rate. That's healthy. 1.18% increase in price. $390,000 for a row house. So you can find those little pockets in those areas. But if, you know, the further out you go, you can find some, you know, like I was in Diamond Valley recently, and, you know, I was just in a really nice bungalow in Diamond Valley, and, you know, you can get into some of these bungalows, you know, in the $500,000 price range if you really want to have that rural living that's, you know, some distance away from the city, but still maybe have the amenities and the community around you. So that exists for sure when it comes to Foothills County. And there is quite a few apartments available in Foothills County. I think, I don't know what the numbers are, to be honest, but I'm sure there's a little bit more than there is in Rocky View. And, you know, decent numbers, $277,000 for a benchmark price and a pretty healthy absorption rate. So this gives you the whole overview. You got a good education on just what happened last month around the whole Calgary and surrounding area. You can see the market is healthy, and it's more of a balanced market. It's a little easier right now to sell and buy at the same time. I think for some people, they're a little bit more comfortable, you know, buying first, or, you know, some people do like to sell first. But I think there's if you're risk adverse, selling first is probably the best way to go about it, but knowing that there's quite a bit of choice, and the odds, unless you're looking for, something that's hard to find, but the odds are very easy to find something that would fit your criteria, just because we've got the inventory now that we did a year ago. So hopefully this has been really helpful. I love doing these videos, and please feel free to give me your feedback and any questions.